Good afternoon this Thursday, April 21st. Massive selling showing up in the wheat market specifically today, with Chicago wheat dropping nearly 80 cents from Monday night's highs. The Kansas wheat market, some 70 cents off of Monday night's highs. Today's losses at one time were well over in excess of 30 cents before a small bounce on the close. And if you subscribe to our podcast, which you can get Heartland Market Talk on your iPhone, Google, or Spotify apps, we mentioned this yesterday along with the newsletter. The problem with wheat is the elevated price we're carrying to world wheat values. And we'll get to this real quickly when we get to our charts, and that the drought is a problem. But it's the western part of the hard red winter wheat belt that is devastated. The eastern portion is how our ratings are probably in the good to excellent category. We'll stay above the 27, 28% good to excellent category, currently at 30%, because the east is doing fine. It's the west that is dying and going to find abandonment. Now, with that, yes, we're going to see the decline of carryout on new crop supplies, but old crop may get bounced up yet before we get out of our old crop status, as export sales, as witnessed in this morning's export sales data, shows we're not robust on our activity. India and Europe, most specifically France, is catching all the wheat that Ukraine is not selling right now. Until their stocks are drawn down, we won't likely see new sales develop here from non-traditional customers until we possibly get closer to new crop grain status. And so that's a lot to do with why today's collapse in wheat followed through from a Monday night high. We'll get more specifically about that here in the upcoming charts. Now first, let's talk weather. The National Oceanic and Atmospheric Administration was out today with their 3-month forecasts, and it doesn't look good for Iowa, Nebraska, and Kansas. Starting with the seasonal precipitation outlook for June, July, and August. This was out as of today during market hours. And so the market was pretty much aware of this as it was happening. And again, it's a forecast. You take that with a grain of salt, but they're putting below normal precipitation, Minnesota into Iowa, all the way down into, of course, the dry areas where it's been in the winter wheat belt. They're dry, but below continues for June, July, and August. North Dakota's been getting a lot of moisture this past week and this week, but overall they still maintain the below outlook. But here's the jump. Notice the above normal temperatures in the 40 to 50% chance probability, near 50-50 chance. They've brought it into Missouri, all of Iowa, and into Minnesota rides into this. This drought has been ongoing here in western South Dakota, Colorado, Wyoming, as well as the southwestern part of North Dakota. This is nothing new to this area, but it's this that should get people's eyeballs' attention. That, whoa, we got a corn belt area, and especially South Dakota, where a massive crop was grown last year in this area where they were catching the rains. Well, they're put into the drought area. Now, this is analysis surface air composites. This is for June, July, August. They throw hot temperatures remain. Nebraska, Kansas, eastern Colorado stays in this. But notice how just the anomaly of the warm temperatures carry up into northwest Iowa, southwest Minnesota, southeast South Dakota. Again, a good crop was grown in this area last year, and we need all of this to capture and have the crop we need to keep our carryout from plummeting below 1 billion bushels on new crop, which basically today's prices in new crop corn, $7.50, implies something is probably near 1 billion bushels or less. Also, precipitation anomaly, dry pattern. Stays right in the central portion of the country, unfortunately for Texas, Oklahoma, Kansas, eastern Colorado. But again, notice how this reaches into western Iowa, southwest Minnesota, southeast South Dakota, Nebraska. We need these guys to produce corn and soybeans for that matter. And that's going to be tough based off of this weather model out today, June, July, August. We'll see how good they are. For today, our updated forecast for through Sunday, May 1st. A lot of moisture here in the northern plains that needs it desperately, well into Saskatchewan and Manitoba as well. They all need it. But again, notice I've been saying in our podcast, in our newsletter, how you could just draw a line right through the center of Nebraska, Kansas, Oklahoma. What's to the east is the good stuff. What's to the west is the dead stuff. Even notice where hard red winter wheat's growing in Montana. There they can't cut a break. And also out in the Pacific Northwest, they're having a hard time cutting a break. They are not happy up there. In regards to where that wheat's grown, again, you could draw a line right through. The best production is to the west of where this dryness stays. And of course, Montana stays dry, and Portland, Oregon. Again, they are not happy. Oh, I see a mustache there. Let's do that again. That area and that area, and they are not happy. There's a little mustache there. Anyway, humor for the day. So what's taking place? Kansas City wheat. Since Monday, we've been warning that the 3-day weekend could have exacerbated prices to a high. We had poked our nose, and I had noticed how our daily highs, even though there were new highs, they weren't runaways. I told you something was afoot. And just inside the box we call a 618 to 786 retracement of a prior high, it was stalling. And we were looking for that to be the top of wave one. I kept moving that one each day. I had it as a high. Well, it finally came today, and now we're in wave two. The question is, how deep will wave two come? And if we look at the French milling wheat chart, we had noted how I had been saying, without European values racing higher, we can't recover back to our old highs. Well, this peaked out on Monday, down several days in a row today, could fall back to moving average support, and prior resistance becomes support near the 348, 350 range. That could imply another 20, 30 cents down in here in U.S. values. And that, of course, could set us up to challenge Kansas City wheat somewhere around the 11.15 to 11.25 range. This moving average has been pretty reliable. Notice when it hits, either it's dead on or if there's slippage. This particular one, slippage was 14 cents to the moving average until it recycled back higher. So we have a spec trade out to try to buy Kansas City wheat at 11.25, stop at 11.03, because if it gets through that, then we could have a harder wave two that could come back and challenge this support value, and that could be near the 10.5 value before we finish out. This, of course, was wave one and 5 waves up. Now we're doing a wave two correction. Maybe we have an A wave here, get a B wave bounce, and then a C wave decline is how this could play out. So if you understand A, B, C, could finish off 2, then we get the next leg higher. We'll see how that turns to the corner. Corn, we've been waiting for wave one. Newsletter said yesterday this was probably an A, this is a potential B, and now a C wave decline could carry us into a wave two. How low we go here in this extremely bullish market with Brazil likely to see their winter corn crop reduced, we'll see. This break here from high to low is 45 cents. In a bull market, we shouldn't break more than 45 cents. Well, 45 cents would imply we could potentially see 7.70 to the downside on the July corn contract, but in a bull market, you'll go shallower. So maybe you have an A, B, C with a match C somewhere at about 7.90, 7.85, and then she turns back higher, and then we start wave three. And of course, this is not to scale wave 5 of wave 3, because you got this 3 wave, then you go down and do a 4, then you go to 5. It's not to scale, just because I can't make it fit on this chart. But this would be a drought, and this would be your July 4th high, probably up there north of $9 if that help happened. Now, December corn broke today 3 days in a row. By tomorrow, per the momentum of December corn, it would be a buy tomorrow, because every time it breaks around 3 to 4 days, they buy it, new contract high. Break 3 to 4 days, they buy it, new contract highs. Break 3 or 4 days, they buy it, new contract highs. So we'll see. Now, if we make a low tomorrow, today or tomorrow, 3, 4 days, and all of a sudden next week we're lower, then you've got a top by virtue of this will signal 755 was the top for this leg. And then we're going to go into a much larger correction. That could be the drying we're seeing come from the Midwest and a corn crop that goes in fast. And again, warmer, drier right now is bearish. Get the crop in, get it germinated, get it growing. Warmer, drier is bullish when we get into June. And so near term, this could create a correction if we break more than 4 days, meaning if we're lower next week, then we'll look back at 755 as what was a top. Beans. This is the July bean contract. Note every day is a higher low since making that low two Sunday nights ago when this ABC correction, all it did was C bumped A, wasn't even the same length, but it just bumped it and confirmed it was a C, and we called it wave 4 and said you are now starting the next leg higher. Now let's apply it to the continuation chart because July beans are now on the continuation chart. As you can see, we're going to come into resistance here at 1740, currently at 1720. The May contract hit 1750 already. This contract high was 1760 on the date of February 24th when the invasion occurred. So potentially wave 1 of wave 5 here, of this wave 5, I can't draw, of this wave 5, wave 1 could probably come in here somewhere. Then we create a wave 2 to the moving average, and then we press on to in wave 3 of 5, which gives us our new all-time highs sometime maybe in May, or maybe it's delayed till summer. But the point is, another wave higher should be activated. Meal today, as you can see, momentum still stays positive. While bean oil has been all the rage, meal could be what's going to start creating the next leg up on beans, as eventually the crush spread will have to favor a pull on the meal here in time. And so with corn also being friendly, of course, in correction today, meal held together well while corn corrected. I think that you got some moving average support that wants to start injecting new buying interest in here. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.